Good morning, folks. This is Naeem Aslam, Chief Market Analyst at AvaTrade, and welcome to our daily fundamental video. What am I looking at is the weakness which is across the board. Doesn't matter whether we are looking at the Asian markets, European markets, or the US futures. In fact, the US futures are trading lower by well over 400 points. Now, of course, this is nothing new because sometimes we do see this sort of a weakness, but everything can change as we move towards the cash market, and the cash market is going to open at 2:30 p.m. London time. But right now, when I look at the European markets, as you can see in the chart, the DAX index is very much under the selling influence, and that trend for the DAX index is really under a threat because bulls are losing control and bears are taking more control of this particular trend, something that we certainly do not want to see that. But the question is, why are we seeing this sell-off? What factors are really driving this sell-off? Well, there's nothing new but the two major matters that we've seen last week. One of them is the surge in coronavirus cases. That is very much the investors are focused on, because remember, WHO, the World Health Organization, has issued another alert, another concern with respect to the surge in coronavirus cases in Europe. But the question is why? Well, the answer is very simple, because if we continue to see this surge in coronavirus cases, which could really make things getting out of control, that means these targeted lockdowns that we are currently experiencing can certainly change into national lockdowns. And those national lockdowns could be anywhere between 2 weeks to 6 weeks, because that is what we've experienced, that is what we have seen in different countries right now. So if that happens, obviously that is going to have inverse or adverse influence on the equity market and of course on the economic activity as well. So this coronavirus stock market rally, which we've been seeing for the last number of months, has come under a major threat. Now, the question for investors and traders is that, look, Naeem, tell us where are the levels, what we should be really looking at, whether it's a buy, whether it's a sell. I mean, where are we going to likely to move from here? Of course, I can't really say that because it really depends on your own risk parameters. But in terms of those important levels, what I am really focused on with respect to the US market, given the fact that the prices are trading below the 50-day moving average on a daily time frame, what I'm really looking at is that 100-day moving average. Now, what is the importance of these moving averages? These moving averages represent or reflect the points where bigger orders can come. Perhaps institutions or rather other speculators will come, and then they will pop up the market back up. That is the usual understanding in the market. So right now, with respect to the Dow Jones, with respect to the Nasdaq index, this is where really I am looking at. I'm waiting for the markets to come into this area and then perhaps see some sort of a bounce. But if we break below this moving average to the downside, the next point of entry, possible point of entry, could be near the 200-day moving average. We certainly do not want these indices crossing below that, because that would be very, very bearish, and that will also mean that we are very likely to go and revisit the coronavirus stock market crash level, the price that we found back in March. So that is primarily the focus with respect to that. Now, moving on to commodity markets, with respect to gold prices, they're still trading in around 1950. So if you are thinking, where are we going to move from here? I think, in my personal opinion, the path of least resistance is more likely to be skewed to the upside. We have large number of Federal Reserve speaking this particular week, and it is very likely that the information coming from them is going to be very conflicting. Meaning someone will say that yes, interest rates should be kept lower. Someone could say even the interest rate could be pushed even lower. And then someone will say that no, I think it's time for us to readjust the interest rate. So what that is going to do is going to bring enormous amount of volatility, the upside and downside moves for the dollar index. That is going to have influence on the gold price, and of course on a Bitcoin prices as well, because they all trade against the dollar. So for me, if there is a risk off asset, and if the traditional textbook trade kicks in, that means gold prices to move higher, and so we should also see Bitcoin prices move higher as well. But if the sell-off in the equity market becomes enormously intense, that means traders can go and start liquidating their positions in gold, and that could trigger the sell-off for gold, and same could happen for Bitcoin prices as well. That's all for today, and I'll see you guys tomorrow.